Okay guys, it's Monday the 5th of August and I've just been taken into a trade on the FTSE 100. So after this pin bar right here at 11:10. So the video should also hopefully have caught the market actually triggering in, because I got asked that last week, after last week's video, if we could just see the trade actually triggering. So the entry is always on the chart anyway, this dashed line, and the stop is always on the chart anyway with this dashed line up here. But basically when I'm getting into a trade, I'm looking for one additional confluence, which is the break of the low of the candle if I'm selling, the break of the high if I am buying. So as always with the trade, we're going to look at analysis, we're going to look at trade management, and then we're going to look at how the trade works out. I'm also just wanted to be a little bit cautious because I'm selling this market and we've already had a big sell-off. So we closed all the way up here on Friday. We then opened all the way down here on Monday. We've then continued to sell off into this morning. And we've only had a little bit of a retracement. Now, this section down here was a good area for potential bullish bounces. And that's really what I was kind of looking for coming into today. Was the market testing down here and then putting in some sort of bullish bounce. But it just didn't set up into a trade. So just had to kind of watch it go by. The market then pulled up and we started rejecting into this zone up here. Now, I was kind of looking at a few different things. So the first one, well, the first where I'm looking for the trade to come down into is really this whole section here at a minimum to this section down here. If we do get down to these levels, very likely I'll look for profit taking, unless we just absolutely crash through it. Now on the rally up, we put in a little bit of rejection. We actually got a pin bar at 10.55, but the reason I didn't get into this one was a couple of different reasons. So the first one is we just retraced, as I mentioned, we tested into this key level of support. So I was looking at it potentially as an area for a stronger bullish bounce. So I was being more cautious first of all. Second, after we spiked up, we still had these highs up here, and I was thinking potentially we'll come back up and test into these levels before the market rolled over. So then I was thinking, okay, if we do that, where's my stop going to go? You know, do I have any previous structure levels that I can use as a, you know, a type of clue? And I didn't. So it didn't make as much sense. Now, we then put in nice rejection candle here. It did have a bit of a nose on it, but nice rejection. We've then grinded back up and we've put in further rejections. So I've gone over this pattern a few times, but I can never remember the blooming name of it. So rejection here, retrace, then further rejection. If we break down below the low, it's giving a confluence that potentially the market is starting to look more bearish. Okay, so as I've mentioned, I'm looking for the market to come down into these areas. We are just starting to test into it just now. And get rid of this line. Is there anything else to go over? The only other thing I'll go over is once the trade gets to break even, well, more likely once the trade's completed, either profit or loss, I'll then jump onto the daily time frame and we'll kind of look at this whole area down here, why I'm being more cautious on sells and why I was looking down here for potential buys. I'll also go over basically the huge sell-off that we had over the weekends. Now, we're just starting to test down into this level, which, as I've mentioned, was the first potential area for support to come in. So let's see how the market gets on. I don't want to give it too much wiggle room. Okay, so what I'm actually going to do, because we are holding at this level, is I'm just going to bring my stop to break even, protect the trade. As I've mentioned, because the way the market has already made such a big bearish movement, I don't want to get locked into a stronger bullish bounce. So stop's now at break even. It's not giving the trade a lot of wiggle room, but sometimes being more cautious is the best approach. So we'll see how we get on. Okay, so that trade has been taken out at break even. As I mentioned, pretty cautious approach. Don't want to get locked into a trade if we are starting to make a bullish retracement. Now, I don't think I've posted a break even trade for a while, but It's all part of trading, yeah, and you get them very often. Frustrating at times, but if you find that you can get your stop to break even, and over the long term it shows that it is stopping you from having more losses, it's beneficial. I always take a cautious approach. Let's have a look at the daily time frame. Where are we? So the market has had 1, 2, 3, 4, 5 huge bearish days. This is Sunday, so we ignore it. Huge bearish days without any sort of retracement. We've then started to come down, testing into previous fairly strong swing areas. So as the market started to bounce from this area, don't want to be locked into it going in the wrong direction. You know, we've not had any real significant retracement, so cautious approach. Okay guys, so that is everything for today. I hope you're all having a great trading week. I'm James Orr, and thank you.